Thank you, Madam Chair. My first question is for Mr. Blogren. In my opinion, the market self-corrected itself on multiple occasions throughout the events in January surrounding GameStop. I asked the question of the last witnesses in the last panel, and I've since talked to lots of folks involved in the financial services world with regards to these issues, and they seem to agree with that. Institutional investors overly shorted GameStop, and retail investors were able to take advantage of those extreme short positions. In addition, Melvin Capital and Robinhood were both in need of capital infusions and found it through the private markets. Mr. Blogren, from your seat at the New York Stock Exchange, do you believe the market was largely able to correct itself throughout the events in late January?
Thank you for the question, Congressman. Certainly the market infrastructure performed in a very resilient, very stable, very predictable fashion, which I think is critical for investor confidence. And I would agree that there were no systemic issues that were presented. I do think, however, and I think the existence of multiple hearings on the topic suggests that there was a fascination with what happened in these particular stocks, and that in and of itself is a cause for concern if it erodes investor confidence. So while we have the best markets in the world, there's always an opportunity to further perfect them.
Well, in response to that, yes, it's an unusual situation, but I think my question is, because it was an unusual situation, and we're having these hearings to see once if there was a problem here, if there is something we need to do, was there fraud, was there somebody else doing something illegal or wrong, and yet the system appeared to work in that the retail investors saw an opportunity to see an overly shorted stock to bring the pendulum back, so to speak, and the companies that had overly shorted it were able then to find money in the markets to shore themselves up. I think it shows that there's some resilience there, and to that point, SEC Commissioner Allison Lee recently wrote in a letter response to Senator Warren, and I quote, it does appear that our core market infrastructure has proven resilient through these recent events, as my colleagues and I have noted. To date, the Commission staff are not aware of any structural issues resulting from the recent significant volatility in the price of certain stocks that indicate a disruption of core market infrastructure. So, Mr. Pivovard, would you agree with that statement that the market infrastructure remains resilient?
I would, but I definitely have not seen any problems with the market infrastructure. But as this episode pointed out, that doesn't mean we can rest and assume that it's going to continue to work in the future. And so one of the things I put forward is that we should look at whether we want to think about shortening the trade settlement cycle.
Well, I think I've got some questions on that, but I also have, to me, as an outsider looking in, when you have a stock shorted 140%, to me, that's a problem. You have more stock shorted than there is stock available. Do you think we need to limit the amount of number of shares that can be shorted, or do we limit the number of times a share can be lent to allow this rollover and to be able to get to 140% to stop this? So that, to me, this will be a way to fix the problem versus other extraneous things. To me, the market actually worked here. People saw an advantage that somebody was doing something wrong and jumped in, took advantage of it, and we got some guys that got literally taken to the market on it. So, would you like to respond to that?
Sure, thank you. I think before the SEC looks at either limiting short selling or looking at potential limitations there, I agree with Mr. Blomgren. We need to start upstream, right? The short selling market relies on securities lending, and to your point, same shares can be lent out multiple times, and you can end up with the odd situation where you end up with a short interest exceeds the number of shares that's outstanding. Right now, that securities lending market, the SEC could go in and gather up information on an ad hoc basis and try to piece together what it looked like in the past, but it doesn't have real-time information. It doesn't have consolidated information. And so before we start directly looking at limitations on short selling, I think we need to address the opacity issues in the securities lending market. And the SEC does have authority there to do that. And so my suggestion would be, first, let's gather the data, and then based upon that data, we can make additional policy decisions going forward.
Well, to me, the number of times that you can lend a share, to me, like you've got a situation that's ripe for musical chairs with your money there. So, my time is up. I yield back, Madam Chair.
Thank you. The gentleman.